Hello, everyone. I understand how the noisy political environment can be unsettling for investors, and many of you have expressed your concerns on how the outcome of the upcoming presidential and congressional elections affect financial markets, namely stocks. It's important to remember that the policy, not the politics, is what matters here, and is only one of many factors that determine our stock selection and our asset allocation, and really has to be looked through a lens of better and worse, but not necessarily good or bad. As I stated in my recent video at quarter end, I remain bullish on the outlook for the economy and for stocks as we end the year and head into 2021. Turning to the election, Dan Clifton from Strategas Partners has pointed out that since 1928, the stock market, as measured by the S&P 500, has correctly predicted elections in all but two instances, 1956 and 1980. According to Dan, when the S&P 500 is positive over the three-month period during August, September, and October, and the U.S. dollar weakens, the party in power at the White House stays in power. And when equities are negative with a rising U.S. dollar, there's a change in control. In the 2016 election cycle, the S&P was lower over the period of August, September, and October, and the dollar went higher, indicating that Democrats were going to lose control of the White House, despite polls indicating the exact opposite. Also, stocks representing the policy priorities of a Republican administration outperformed stocks representing Democratic policy priorities. Today, the message is not quite as clear. From August through October 21st, the S&P 500 is up over 4%, and the U.S. dollar is lower by about 1%, indicating no change in the White House. Dan Clifton points out that the stocks that would benefit from policies of a Republican president are significantly underperforming a basket of stocks that would benefit from the policy priorities of a Democrat in the White House, contradicting the broader market trends. Democrats plan to raise the corporate tax rate and the individual rate for high earners and are planning to spend the money on infrastructure. Also spending on broader health care insurance coverage for the uninsured under the Affordable Care Act and more funding for the National Institute of Health. The Democratic candidate is likely to ratchet down trade rhetoric with China, which should be supportive for technology shares as well. For the incumbent in the White House, a policy of less regulation should continue and will benefit banks, energy, and other highly regulated industries. Defense spending should also remain stable, benefiting those companies as well. These seemingly contradicting signals are probably indicative of yet another close presidential race, but we'll certainly know soon enough. When I work with my portfolio teams, I have emphasized having balance in the portfolio of companies that will benefit regardless of who is elected. And that's really important when constructing portfolios, because none of us can really know exactly what's going to happen. I think there's three likely outcomes in this election. The status quo of a Republican president and Senate with the Democrats holding the House, the Democrats sweeping Congress and the White House, and a Democrat president and House with the Republicans holding on to the Senate. Strictly from the lens of policy, in my opinion, the best outcome for stocks is a Democrat in the White House with no change in Congress, i.e. having a Republican Senate and a Democratic Congress. Under that scenario, I think you get a ratcheting down of rhetoric with China, helping technology companies, no corporate or individual tax increases because the Senate won't pass it, and some infrastructure spending, perhaps not as much if it was a clean sweep. The status quo is probably neutral for stocks, however, and we could see not a lot really change from where we are right now. A blue wave, however, could trigger the biggest short-term sell-off, but even in that scenario, stock selection is important, and the sell-off should be short-lived and contained to companies that are perceived losers under that scenario. We're down to the wire in this very contentious election occurring while a healthcare crisis remains with us. As investors, we remain focused on what matters, and ultimately, it's profits that drive stock prices. Policies of the different parties does play a role in our thinking, but it's only one of many factors that we look at when we go through our stock selection and asset allocation decisions. Given the contentious nature of this election, it's easy to get distracted, but having invested through many elections with differing economic conditions, it's important to take everything into context and to focus on the things that matter. Call us anytime if you have questions or concerns. Thank you very much.
The information contained in this webcast reflects the views of Palisade Capital Management, LLC, as of the date of its original broadcast, and such views are subject to change without notice at any time. All information provided in this webcast is for informational purposes only and should not be considered investment advice or recommendation to purchase or sell any specific security. While the information presented herein, including information obtained from third parties, is believed to be reliable, no warranty is made concerning the accuracy of such information. There can be no guarantee that any forecast discussed in this webcast will be realized. Consult your financial advisor before making any financial planning or investment decisions. Past performance is not a guarantee of future results.